Hello and welcome to Tokenomics. I'm Manisha Gupta. The world's second largest crypto exchange, FTX, crashed earlier last week, a huge blow to the crypto markets globally. The global crypto market has seen a massive sell-off. This being the year of the crypto winter, as we are calling it, the market capital has declined from nearly $3 trillion of a peak to around $825 billion. And post the FTX crash, we've seen declines coming in even more. According to the reports, the U.S. Justice Department, the Securities and Exchange Commission, and the Commodity Future Trading Commission is now investigating how the exchange handled customer funds. The failure of FTX has raised many questions, one of those being that is there a need to change the regulatory framework for the crypto markets? What are the global implications of the FTX hack? Where does India stand amid this crypto carnage? To answer some of these questions, I am now joined by Sandeep Nailwal. He's co-founder at Polygon. Sandeep, hi, welcome to the show and thank you so much for taking time for us today. First of all, when you look back at 2022, there have been various failures. We are calling it the crypto winter as it is. But would you say that it is really centralized exchanges which are the core of different meltdowns that we've seen in this year?
Absolutely, absolutely. I think you nailed the exact point. This whole year, and I think JP Morgan also said, yesterday or day before yesterday, that this whole year, the fiascos that we have seen, these are more the kind of fiascos by these centralized actors. Now it's an exchange. Previously, it was some sort of like a big hedge fund which was mismanaging users' funds and things like that. Most of the times, it has happened always like that. All the decentralized protocols have worked the way they are supposed to, and actually the way these decentralized protocols are implemented, there are liquidation strategies and all that, which ensure that the user funds or the lenders or borrowers, their interests are not compromised, even in a case of a extreme scenario or extreme market swing like that, which we saw. So, in short, like the DeFi has upheld its, kind of the way it should be functioning. It's the centralized actors which are failing and throughout this year. And I think within us, within the crypto community, we all believe that this is a part of a good cleanup that is happening, because all these systems were over leveraged, single party having a lot of control of the user funds and things like that. And I think now it's getting better. Overall, we are getting ready for the prime time, I think, as a crypto community.
All right. Sandeep, as you said, there's been a lot of learning and a lot of cleanup as perhaps the year has seen. But, the buzzwords in the recent few months still simply have been Web3, core technology, blockchain being the major businesses. Would you say FTX perhaps missed out on many of these?
Yeah, definitely. Not only FTX, but when a user is using a centralized exchange, essentially what they are doing is they are actually it is no different than using a fintech app. Like, you are going there, you are creating your email, using your email, you are creating an account and all that, and you are actually not holding any crypto. You are just holding an account with this kind of exchange or a broker or whatever you want to call them, and they control all your funds. And the other part is that there is no regulation on these offshore exchanges as of now, and that is also that is also FTX had a lot of US users, and one of the biggest failures here is actually of US regulator, I would say here, because there have been the crypto community, especially the decentralized, the people who are building these decentralized protocols and all that, they have been actually literally crying and begging for the US regulator to regulate these centralized exchanges. Like, for example, you have Coinbase in the US, right, which is a very regulated, publicly listed company. You have Kraken exchange in Canada. These are very well-run exchanges, and there is always a regulatory requirement of keeping the user funds one-to-one. But these offshore exchanges, and this is what happened, the SBF, which was the CEO of FTX, he was considered to be one of the bigger guys the biggest guys in the industry. Because he had the control of all user funds, he was he was mismanaging those funds or using user funds to do investments and things like that. So either if because the user experience in these centralized exchanges is much better, because decentralized custody, holding your own custody, can be difficult at times to manage. So for the short term, if you want to use an exchange, use a regulated exchange in a regulated territory like Coinbase, like Kraken, and I hope that Indian government also and Indian government have been very active with these exchanges, I think. And I feel that, for example, in India also, you use some of these exchanges which have been closely guarded, and let's say Coin DCX and things like that, where, like, again, this is not a financial advice, and I have no clue, but I just feel that these are exchanges which are well run and under the government, kind of close interactions with the government in the past have happened for them. But
Sure.
otherwise, if you are a crypto user, you should use self custody, which is the primary, for the decentralized world. I think it can be very easily said that, ideally, if you are coming in this DeFi world, you should be doing self custody, right? And then you don't need to trust any centralized party. So you use your own keys. You use decentralized exchanges like DEXs. You use decentralized lending, borrowing if you want to earn yields and things like that. And that way you are not dependent on anybody else. Only problem is that right now, where we are in the stage of these self-custody tools, the user experience can be slightly difficult. You need to be an advanced user to kind of do that. That's why users keep tending to go into these centralized exchanges, which, I think, this was a very big example where of this kind of blow up.
Oh, absolutely. FTX has been the biggest in crypto as a history, and one of the bigger ones in the overall financial markets globally as well, as far as the history goes. But, a lot of debate really seems to be coming up right now, Sandeep, and there is this requirement, and there have been a lot of exchanges putting out, announcing that they will publishing proof of reserves and proof of funds and perhaps proof of liabilities as well. I mean, isn't this being something that already was required? I mean, we keep talking about on how do your own research and reading the white paper are such important things to do.
Yeah, I mean, absolutely. Manisha, you are bang on that. You are actually supposed to be on all these exchanges if you are managing certain amount of funds. Like, I would say that if you have more than 20% of your net worth in any of these exchanges, you should be demanding. The users should be demanding, and this is a good precedent where users should be demanding that if an exchange is not posting their reserves, proof of reserves and proof of liabilities on a monthly basis, then you should not be using that exchange. But if you see, you can already see that this is basically the free markets trying to self-regulate themselves. There's still no proper statutory regulatory requirements on many of these offshore exchanges. And right now it's unclear that how they can do it also. But this event actually marks or this event kind of at least ensures that the people would be more vigilant if they are using a centralized exchange. And I recommend to everyone that, who is having more than 20% of their net worth on any of these exchanges, either you move those funds out into your self-custody like Ledger and whatnot, or MetaMask or whatever you feel is more safe and you can manage it, or you simply demand this from these exchanges continuously. And this should be a user-led movement where all the users should demand this proof of reserves and everything.
Sure did. So, Sandeep, a lot of people have yet again got into that moment saying, oh, I told you so. There is a lot of skepticism in any case around this. And anytime something like this happens, people start to write this segment off completely. What's your sense after what has happened? I mean, you've called it a good cleaning. Going forward, how do you look at the space? How long before we can come out of this shock, really?
Yeah, because, FTX was so big, and actually FTX was not that big. Actually, in the exchange space, it's not that big. There are other exchanges also. But SBF per se, like Sam Bankman-Fried, he was kind of a poster boy of crypto in the Washington, D.C. and all that. So it's more of his personal collapse. And suddenly, you think that, in the Washington, D.C. and other places, who would actually trust people from crypto, right? Everybody right now wants to simply stay away from crypto in any form whatsoever, right? So I think that's where is the bigger kind of, this is a bump for the community, because last year we saw that everyone was getting enticed and interested in coming into blockchain space. Now it will leave some heavy scars for any kind of celebrity or any kind of at times brands or even these big politicians and kind of organizations or institutions in the globally, I'm saying. So there's going to be some impact for at least 6, 8 months, 12 months, which is going to be problematic, maybe more. But I think the Web3, it does not affect anything in the Web3 native community. If anything, I think this helps us all to go back to the roots of the fundamentals. I've been also writing to the community that, the fundamentals of self-custody, trustlessness, and all these things we should go back to our roots as a community, which, actually in the last 2 years of bull mania, we all ignored. And this is a
Oh,
good
yes.
reminder for everyone.
You know,
Painful reminder, but yes.
all the time, Sandeep, we were talking about blockchain and crypto. We were talking about the fact about smart contracts and permissionlessness. Trustlessness is something new that you guys are dealing with. But since we have you with us, what's Polygon doing now? How has the year been for you? What are your plans going forward?
Yeah, so I mean, for Polygon also, like the year has been incredible. Like so many big brands, like from Starbucks to Instagram to Reddit, all of these people, launch some sort of their Web3 journeys, and luckily and fortunately for they all of them, most of the big brands globally, big tech, they have done these things with Polygon till now, and I think it's going very well. And we saw that Reddit NFT spike, like going absolutely amazing. And then recently an Instagram creator also like made, I think, $8 million. Like I don't have confirmed reports in one NFT drop. So this is basically for these big tech giants. This is actually opening up new avenues of revenue creation for these companies as well as the content creators. And I think the creator economy has been one of the biggest use cases of Web3, and Polygon is continuously from like, although we kind of help or kind of grow these things, like incubate or whatever it is, like wherever we can help these things to grow and evangelize among these brands and all that. But we are more of an infrastructure player, right? So from our side, we continuously focus on bringing the next and the cutting edge infrastructure. So for us, like the ZK EVM, which kind of like provides Ethereum, almost like it can be argued like like it provides Ethereum an infinite kind of scale.
Sure.
In terms of its decentralized infrastructure and all that. So ZK EVM for Polygon is very big. We have Polygon ID, which we want like more regulated use cases and compliant use cases to be enabled on blockchain, Sybil resistant use cases to be enabled on blockchain. So many of these products are coming in, and we have a very thrilling year packed up for 2023.
All right. So good year and a thrilling year 2023. So somebody's having it good for sure. Sandeep, thank you so much for joining us. And on that note, we'll go for a short break. But don't go anywhere, because we'll talk about the Indian impact of the FTX fallout after this short break.